Welcome back. You're tuned in to Bazaar Morning Call and hope you're having a good start to the week. Well, let's get in Dipan Mehta, who joins us on the show. Hi, Dipan. Good morning. Good to see you in as always. Well, it's an interesting phase for global markets yet again with this, Iran and Israel conflict not showing any signs of de-escalation, not as yet as well, though that's the hope. But we have a lot of stocks that are going to be in focus. Now, crude oil prices has spiked up. That obviously will be one focal point. That's why we'll have Vedanta in focus among other stocks like ONGC and Oil India. But I wanted your view on Vedanta. They're going to be considering a dividend in the next couple of days. There's a demerger, which means it's a special situation that will play out in the next 2 months at most. And also, you have valuation support on this name. What's your view on Vedanta?
Good morning, Nigel, and thank you for having me on your show. I think we are positive on Vedanta and have said so, I think, in the past as well. Amongst the best metal stocks to own at this point of time, as well as the fact that, yes, I think whenever they are going to, split the company and have separate listing, some amount of valuation unlocking will take place. And I think that after that, if the promoter group decides to exit out of one or two of these businesses, it will make the holding company even more secure. And whatever last around the holding company, those also will get resolved. And the company has been gradually expanding a capacity as well. So generally positive. And one last thing, Vedanta's earnings are very much dependent on Hindustan Zinc. And Hindustan Zinc should do extremely well because of higher silver prices. So from that point of view, one should consider buying Hindustan Zinc along with Vedanta because that's a separately listed company and will remain independently listed. So I think that's just one aspect which comes to mind.
Okay, Vedanta in focus, got that. Dipan, I was looking at the price chart of Z and Z has turned around quite interestingly. I mean, along with the whole market recovery in April, May, Z's had a good rally. Maybe we can pull up a one-year chart of Z. The stock had hit a low of around 90. And since then, now it's back to almost 137, 138. The board is meeting today. They could be considering all kinds of options to drive the business forward, maybe even fundraising. Yeah, that's the recovery I'm talking about. So March is when it hit that low of around 90. And since then, it's managed to recover, though, of course, still down on a 12-month basis. Any interest in this company and stock, Dipan?
I think that we are putting it back on our watch list. And the reason for that is that the management's intense focus on improving the profitability, especially the profitability of Z5, their OTT venture. And that's still bleeding, although losses have come off significantly. And once that starts to break even, which is the plan in the next year or so itself, that will give a big delta to the earnings of Z. And valuations are attractive. I think all uncertainties around management, around merger are over and done with. And I think the company will find its place as a player in the media market. And you could expect earnings to move up because of lower losses. And eventually, I think P multiples also can improve for Z. So it's a great counter-tactical play. And investors, who prefer to go in for distressed assets and look for turnaround stock, I think Z is a great investment opportunity from that point of view. So constructive and very positive on Z. But look, it's a company which keeps on swinging surprises from time to time. So we hope that there are no new surprises in terms of any issues in the balance sheet or any such deals that the management has done in the past.
Okay, so Z, you're still weighing it a little favorably to see if this turnaround happens or not. But speaking of turnaround stories, SpiceJet finally has turned in a profit. But it's turned in a profit because revenue is down. I mean, they still don't have enough planes up in the sky. Would you view this as a potential turnaround, or is this a strict stay away?
I think if you have a high risk appetite, certainly you can look at SpiceJet as well. And clearly, I think it's very that there are going to be only at best 4 players in the Indian aviation market. But look, I think all our bets are on Indigo at this point of time. The largest listed company with overwhelming market share, and last few quarters have been very good. Track record also has been excellent as compared to SpiceJet. So I think if you have a high risk strategy, you could get a decent outperformance in SpiceJet as well. But I think from a more stable and consistent performance point of view, still prefer Interglobe Aviation.
Still prefer Interglobe. Dipan, hi, morning. BSC is down some 10% from the recent highs. Any thoughts here?
Prashant, I think valuations are just too high for a business which is so impacted by regulatory changes and which day of the week the expiry takes place. and kind of cash market volume share not growing as anticipated. Sure, it's a great story, done excellent progress last few quarters or so, regained a lot of its lost glory, but valuation, at these levels, 70, 80 times, I'm not so sure it can give a great outperformance going forward.
The other areas are going to be defense. Again, I don't know, the news flow will continue. So the G7 meeting is on, starting today. This conflict, of course, keeps defense spending and all these things quite alive. NATO meeting is next week, where formally NATO perhaps may adopt the resolution to increase defense spending to 5% of GDP overall, compared to some 2% they spend right now. This morning, there are some reports that Japan and EU are planning a major upgrade to defense cooperation. So lots of chatter, but who's going to be supplying to and exports, etc. Companies like BHEL have spoken about export opportunities, but the exports about $100 million for BHEL can grow. But what is your sense here, defense, Dipan?
First of all, no, I think for exports to grow in a meaningful way, it's a very long-term sort of process. And again, they have to go through many hoops and many clearances before they can start exporting. There'll be government clearances also required. So it's a great story, sounds good, but it's not going to be immediately lead to higher earnings for any of the defense companies. Secondly, I think a lot of the positives have got captured in the stock price as well. I think all of these defense companies are trading at extremely rich earnings multiple, anywhere from 50 times to 150 times or so. And in the past, whenever we invested in such high P multiple stocks, although the earnings come through, the price doesn't go really anywhere, and opportunity is lost from that point of view. So I think as a strategy, investors should remain invested in the defense stocks which they have, because there's a lot of fancy around these stocks and a lot of investor interest and momentum. But I don't think the risk return favors a fresh investment or increase in positions in defense stocks.
Okay, point taken. And I think it's a good story, but is it a good stock to buy after the run-up? That's the question, and that's really important if you're an investor and not just sort of an observer. And Dipan, a point taken in that. Dipan, lots of primary market action also in a way starting. Any thoughts on any of the recent issues which have looked good? By the way, we've had over the last 6 months, 7 months, lots of companies which have listed, lackluster demand, and then 3 months, 4 months later, markets realizing maybe there is some value here. So all kinds of things going on. But for example, Friday we had this Oswal Pumps issue which opened. Any thoughts?
See, I think what you said, there's a strategy in that also, that investors can avoid the IPOs because hardly any allocation takes place over there. And then on listing, there's a lot of flurry of activity, momentum. And then once things settle down, especially as a test, I think see 1 or 2 quarterly numbers, because that's the real test for a good company, that after listing, what kind of performance comes through. And then see if the performance is really good, lives up to the expectation of investors, and valuations may have come off because of less momentum and less speculative activity. Those are good entry points. And for the record, Prashant, I think a lot of new ideas in the next few years will come from these new listings, because a lot of innovative businesses, a lot of concept businesses have got listed. They're all in the small mid-cap space, and they're all in the kind of sectors where there is massive growth, unlike the mature sectors. So from that point of view, we're always looking for listings, new listings after 6 months to 1 year of listing. And I think a lot of interesting companies have popped up over there.
Dipan, very quickly, this is a moving story, and I think it will get hotter and hotter as we get closer to the next GST meeting in July. But what's your take on some of the large auto stocks, which are right now above 28%, most of the big cars, the big SUVs?
No, that's wishful thinking that they will reduce the GST on anything at this point of time. Let it take place. I think no point speculating about these events as of now. This is a tricky subject, and there are a lot of vested interest in not reducing any of the GST rates, or clubbing them together, because a lot of state governments are heavily dependent on GST revenues for funding all the various subsidy schemes which they have announced. And as such, there's a big crunch as far as state governments are concerned. So I wouldn't bank on any reduction in the GST rates in the upcoming meeting.
Okay. All right, Dipan, we'll leave it there. Let's see how this progresses. Good conversation as always. You have a good trading day, and we will connect again soon.